Good morning, ladies and gentlemen, and welcome to the second public hearing of the Joint Select Committee on Finance and Legal Affairs, pursuant to this committee's inquiry into the supervisory and prudential oversight of credit unions in Trinidad and Tobago. I am Marlene Atz. I am the chair of this committee, and I wish to welcome those who are joining us here live at the committee, but also those who are joining us on our various parliamentary platforms. Permit me to begin by stating the justification for this inquiry. Our inquiry stems from the evolving role of credit unions in Trinidad and Tobago's financial system. It also is underpinned by the historical shortcomings in supervision and governance that have exposed credit members to material financial loss. But perhaps most importantly, we recognize the growing systemic importance of the credit union sector. The legislative and supervisory framework for this sector remains anchored in what we can describe as some outdated provisions of the Cooperative Societies Act of 1971, which lacks modern prudential standards and enforcement mechanisms that are suited to our current realities. So our inquiry we see as justified to assess whether the current supervisory and prudential arrangements are adequate to protect members' interests, the members of the credit unions, their interests, to ensure accountability, to maintain financial stability, and to uphold the cooperative values at the heart of the sector. Again, I would wish to welcome the members of the public who are viewing, and I invite the public to submit comments on the Parliament's social media platforms, the YouTube channel ParlView, or via Facebook and X, formerly Twitter. And you can also follow us on Instagram and Facebook at TTPAL Committees for real-time updates and highlights from the committee meetings. Before I ask the various representatives and my colleagues on the committee to introduce themselves, I would just wish to add some framing comments in terms of what I think are some important factors that underpin our inquiry. In any country, and I'm sure the stakeholders here will agree, in any country, the strength and stability of the financial system are central to economic resilience and public confidence. This is particularly true in small open economies such as ours, where external shocks, revenue volatility, and global financial conditions can have immediate domestic consequences. So the soundness of our financial institutions is not a peripheral issue. It is something that is a core element of our economic stability. And it is precisely because of the importance of the credit union sector that we think it warrants careful and structured examination. So our inquiry is not premised on any presumption of failure, nor does it seek to diminish the cooperative model, which has contributed meaningfully to economic and social development over many decades. Rather, our inquiry reflects an acknowledgement that while the scale, complexity, and systemic relevance of the sector has evolved significantly, the legislative framework, as I mentioned earlier, dates back to 1971, now over 5 decades old, and that legislative framework has not evolved at the same pace as the growth of the sector. So with these few words of introduction, I wish to ask the representatives of the Ministry of Labour and Small and Micro Enterprise Development and the representatives from the Cooperative Credit Union League of Trinidad and Tobago to introduce themselves. So I start with P.S. Willis, if I can ask you to introduce yourself and the members of your team.
Good morning, Chair and members. I am Natalie Willis, Permanent Secretary in the Ministry of Labour, Small and Micro Enterprise Development. I will ask my colleagues to introduce themselves, starting with my right.
Good morning, Chair and members of the committee and my colleagues here. I am Deborah-Ann Scott, Commissioner for Cooperative Development. It's going to take a while for me to get used to that. Commissioner for Cooperative Development.
Good morning, Chair and members of the committee and members of the public viewing online and various platforms. My name is David Moore. I'm the Cooperative Development Specialist within the Ministry of Labour, Small and Micro-Enterprise Development.
Good morning, Chair and members. My name is Lauren Murray. I am the Cooperative Development Specialist in the Cooperative Development Division.
From the League.
Good morning, Chair, members of the committee. My name is Aldrich Neptune. I'm President of the Cooperative Credit Union League of Trinidad and Tobago. And similarly to my PS, I will ask the other members of my team to introduce themselves.
Good morning, Madam Chair, members of the committee. I am Marlon Pear, Vice President of the Cooperative Credit Union League of Trinidad and Tobago.
Good morning, Madam Chair and members of the committee. I am Diane Joseph, Chief Operating Officer of the Cooperative Credit Union League of Trinidad and Tobago.
Good morning, Madam Chair and members of the committee. I am Dainira Ramcharita, Senior Accounting Officer of the Cooperative Credit Union League of Trinidad and Tobago.
Thank you. May I now invite the members of the committee, starting with my extreme right, Dr. Sitcharan.
Hi, good morning all. Richard Sitcharan, Member of Parliament for Caronies.
Yeah. Good morning. Satya Kama Maharaj, Vice Chairman.
Good morning, everyone. Vishnu Danpal.
Good morning, everyone. Brian Manning, MP for San Fernando East.
Thank you, everyone. And I would also wish to introduce, not by name, because there are too many names for me to remember, the other persons in the room from the Parliament Secretariat in various operational areas of the Parliament. So I would like to also welcome them to this hearing and to thank them for the usual support and human service that they're providing to this committee. Before I proceed, may I ask everyone to ensure that their phones are on silent, because we want to minimize any disturbance since we're being streamed on all of the technology and all of the platforms. So we want to ask you to put your phones on silent for the duration of the inquiry. Let me begin again, but I wish to now state explicitly for the members of the audience who are not in the room what are the inquiry objectives, and I want us to state those explicitly. So we wish to assess the adequacy, effectiveness, and enforcement of existing supervisory, regulatory, and governance arrangements for credit unions and cooperative societies in Trinidad and Tobago, with specific emphasis on the roles, responsibilities, and powers of relevant oversight bodies under the current legislation. We also wish to examine governance practices within credit unions and cooperative societies, including board accountability, management oversight, member rights, transparency, and compliance, to identify any structural weaknesses and risks to members and the broader financial system. Our third objective is to evaluate whether the current legislative and regulatory frameworks are fit for purpose, having regard to the scale, complexity, and systemic importance of the sector, and informed by lessons arising from past institutional failures. And our final inquiry objective is to examine the legal, institutional, financial, and cultural challenges associated with strengthening oversight and governance within the credit union sector. So with those objectives in mind, I wish to invite PS Natalie Willis from the Ministry of Labour, Small and Micro Enterprise Development to make brief opening remarks to this inquiry.
Thank you, Madam Chair and members of the committee. The Ministry of Labour, Small and Micro Enterprise Development is grateful for the opportunity to meet for a second public meeting with the Joint Select Committee on Finance and Legal Affairs for this inquiry into supervisory and prudential oversight of credit unions in Trinidad and Tobago. The Ministry looks forward to deepening the dialogue at this meeting, where we are joined by one of our key stakeholders, the Cooperative Credit Union League of Trinidad and Tobago. Madam Chair, as mentioned at the first public hearing held on January 23rd, as one of the Ministry's core functions, we continue to focus on the sustainable development of the cooperative sector and strengthening the cooperative development division of the Ministry to better support societies with training, compliance guidance, and business development services. These reforms continue to be priorities on the agenda of the Ministry, and in this regard, we have engaged representatives of the cooperative movement, including those from secondary bodies such as the Cooperative Credit Union League of Trinidad and Tobago. The Ministry, through its minister, continues to solicit views and concerns of various stakeholders within the sector with the view to amalgamating all perspectives shared in the revisioning of the sector. We will continue to strive towards strengthening the regulatory framework for cooperatives, as well as creating the enabling environment for them to grow and flourish. We look forward to fruitful discussions, and we continue to avail ourselves to the deliberations of the committee. Thank you.
Thank you, P.S. Willis. Mr. Neptune, may I invite you to make some opening remarks?
Thank you again, Madam Chair. Madam Chair, let me first say, from the position of the Cooperative Credit Union League of Trinidad and Tobago, we are indeed happy to be invited to this session. We look forward to the collaboration, the discussion, and everything that the session may yield. In addition to which, we continue to focus on our role as the Cooperative Credit Union League of Trinidad and Tobago in terms of our advocacy, our development and training, our support of our member units. And again, we thank you and your committee for inviting us, and we look forward to the discussions.
Thank you again for being here, Mr. Neptune and team. And I wish, before I proceed further, I wish to extend a particular welcome and congratulations to Ms. Deborah-Ann Scott, who I understand has recently assumed the position of Commissioner for Cooperative Development in the Ministry of Labor. And I look forward to your contribution today. I know you've recently arrived, newly minted as it were, but I look forward to your contribution and to working with you in terms of this inquiry and fulfilling the objectives as have been previously stated. So I wish to start the ball rolling. I want to thank again the League. The League has provided us with a substantial amount of information for today's inquiry, and I'm using substantial in the most generous sense. It's a lot of information that was sent us, and it was a lot of information for us to digest. But while we, the members of this committee, have had the benefit of receiving the information, I think this is a unique opportunity. I don't recall any other chance that the League might have had to address the population of Trinidad and Tobago in terms of who you are and what your role and function is in terms of the credit union, space in Trinidad and Tobago. But because this is a formal inquiry, I think I would wish to ask you to begin by introducing yourselves, not as individuals, but introduce the League in the context of the credit union landscape in Trinidad and Tobago. So let me clarify what I mean by that. As it stands now, credit unions are governed by the 1971 Act, the Cooperatives Act, which essentially gives responsibility and oversight to the Commissioner's Office. And I would wish for us collectively, the people of Trinidad and Tobago, to understand what is the role of the League in this space, and what is the legislative or regulatory oversight that the League provides in the context, because we heard mention by P.S. Willis of the League as a secondary agency, secondary partner in this process. But I think because your members are probably viewing or will view, this is an opportunity for the League to sort of clarify for us where do you fit in the credit union landscape from a legislative and a regulatory framework, so that we have that understanding from the outset. If you may, Mr. Neptune.
Thank you again, Chair. The Cooperative Credit Union League of Trinidad and Tobago, in its strictest sense, we don't have any legislative or legal authority to to govern or manage credit unions. Our role as a national umbrella body is, I would suggest, more supportive in nature and persuasive. What I mean by that, we are responsible primarily for advocacy in the context of development of the movement as well as training in relation to the movement. We have appeared before a committee sometime before, and we had made the overtures to the committee and the powers that be, let me say, that we are willing to assist in terms of the regulatory framework. And as it stands now, our role, as I said, is persuasive. We can't sanction, we can't demand, we can't request any or subpoena or whatever, for want of a better word, any documents and or make any other interventions in credit unions in Trinidad and Tobago, save and except in advisory nature, a supportive nature, and training nature. That role falls primarily to the Office of the Commissioner of Cooperative, and we try to support that role in the context of guiding our members, assisting. We have some, I would call it self-imposed regulatory framework where we ask our members to adhere to certain guidelines and to follow as far as practicable, in the strictest sense, the guidelines as presently laid out under the Cooperative Society Act.
All right, thanks for that clarification, Mr. Neptune. All right, so in terms of the documentation you've provided, and it may take us some while to kind of wrap our minds around all of the documentation, but as I've seen it, you know, you've indicated that that the League has no legal authority to govern credit unions, and that is, you know, domiciled with that authority rests with the Ministry of Labor under the Commissioner's Office, as stated in the Act of 1971. So on the last occasion, a lot of information was shared in terms of the regulatory framework, etc., all the proposals that have been done, because on the last occasion, we benefited from the Central Bank of Trinidad and Tobago appearing before us, along with the Commissioner's Office. So today is a kind of natural progression from that conversation. So I want to get some clarity from you. I'd like to get some clarity from you in terms of some timelines. And again, this is for the benefit of the committee to fully understand and appreciate where we are in 2026, but to understand some of the historical context, because I think unless we understand the history, we wouldn't be able to understand where we are now, and we wouldn't be able to navigate moving forward. So forgive me for going down memory lane a bit. So in 2008, we know that there was a bit of an unfortunate situation with respect to what happened in the credit union movement in 2008 and the Hindu credit union. So that has provided us with some historical context. That was in 2008. And then in 2014, we had what was a draft bill that looked at some improvements, because as at 2008, when we had the collapse of the Hindu credit union, the only legislation that was in place was the 1971 legislation, which remains the only legislation that we have in place to deal with the credit unions. So we had 2008, we had that collapse, and we know the economic and social fallout from that, because as I would have stated in my opening comments, and as everyone in this room recognizes, credit unions play an important role in terms of anchoring a particular segment of our population from the financial, but they are a key element of the financial ecosystem in the country. So we had 2008, that collapsed, then we had 2014 when we had the draft legislation, which sought to essentially provide for greater regulatory authority in terms of the credit union movement and oversight, as it were, and that was in 2014. That bill has now elapsed. Nothing came out of that bill at the time. And then we fast forwarded to 2019, where there was a cabinet-appointed committee to look at this very issue of how do we strengthen, given the trajectory of the credit union movement, and we recognize that it was increasing and it was getting larger and larger in terms of its footprint in the financial landscape of the country. There was the recognition in 2019 that a cabinet-appointed committee be formed to look at how do we give greater regulatory teeth and oversight to the movement. And coming out of that 2019 cabinet-appointed committee, there were some recommendations that were identified, and the recommendations included inter alia that there be the swift creation and I'm quoting here from the documentation provided by the League itself, there be the swift and the medium term, well, in the short term, the commission, the Cooperative Development Division was transferred to the Ministry of Youth Development and National Service. But the medium-term recommendation, which is the one that I want to focus on given the objectives of our inquiry, was that there be a swift creation of a new independent authority to manage both regulatory and administrative functions of financial and non-financial cooperatives, and that authority, that independent authority, should have a board of directors comprising of representatives from the Ministry of Finance, the Ministry of Labour and Small Enterprise Development, the Central Bank of Trinidad and Tobago, and the Cooperative Credit Union Movement. And that authority, that independent authority, coming out of the recommendations of the 2019 Ministerial Subcommittee, that authority will report to the Minister of Finance. And then, of course, there was also the recommendation that there be appropriate legislation be developed for the authority to regulate and supervise the credit union movement and to treat with the compulsory deposit insurance scheme. So that was 2019. And then in 2024, there was the policy proposal document for the Independent Cooperative Authority that was provided to us by the League. And there is, from again the correspondence provided to us by the League, provided to this committee by the League, there is ongoing correspondence between the League and the implementation team, where there appeared to be some differences of opinion in terms of the report of the implementation team. And that led to the development of what we will refer to as the minority report that was submitted, that was prepared by the League in May, and that was dated of May the 29th, 2024. Mr. Neptune, is that a fairly correct kind of chronological unfolding of events?
Very accurate indeed, Madam Chair.
So I will take my stand. I will move on from that. So, help me to understand, help this committee to understand, and help the population to understand, between 2014, when we had that draft bill, it took essentially 10 years for us to get to the point where we had the policy development document, that proposal, being submitted. So help us understand what took place in those intervening years, and how the proposed independent Cooperatives Authority, as identified by the League, as proposed by the League, what is the difference between that and what was being proposed in the 2014 document, the 2014 bill that was put together? If you can help us understand that.
Well, Madam Chair, let me start by saying that at the League, we are satisfying our minds that the 1971 legislation is not sufficient to treat with what has evolved as the movement. I'm not too sure whether or not the movement, the frame of that piece of legislation anticipated what the movement would have been today. So we understand and accept readily that there's need for modernization of the legislation in the first instance, or a changing of the legislation to suit what the credit union movement has become. To answer the question with respect to the difference between 2014 and the policy proposal document, which was a criteria of the implementation committee, we have also maintained at the League that the cooperative credit union movement, the credit union by nature, it's a unique criteria based on how it came into being and based on how it has been governed over the years. And in those circumstances, we are satisfied that it cannot be a one-fit-all piece of legislation to treat with the movement. It has to be something that takes into account the unique nature of the credit union movement. In 2014, we felt, and we continue to maintain, that the legislation as proposed would have been inimical for the movement. We sat on that cabinet-appointed committee that came to the policy proposal document, and we are satisfied that the proposal in relation to the Independent Cooperative Authority has the capacity, once managed properly, to treat with the movement in terms of strengthening the legislation, in terms of assisting the movement to grow, and protecting all investors in the movement going forward. So we see that as the difference between the two instances.
All right, if I may, you've come to 2024. I want to go back to 2014, the 10 years prior to 2024, because what you're talking about in terms of the independent cooperative authority, that's 2024. So I want to get back to the 2014 bill, because if we can take it through slowly, because again, it's not just us in this room. I would like the viewing and listening public, many of whom I'm sure are members of credit unions, I want them to understand what we're trying to do, but I also would like them to have the opportunity to understand the history. So let's go back to 2014. What were the challenges that the league saw? Because you said that they were inimical to the development of the movement. What really were the issues, if you can articulate and detail, what were the issues with the 2014 bill that you felt would stymie? I'm using that word. I don't know if that's a word that you would wish to use, that you felt would stymie or would not support the growth and the development of the credit union movement. Because we will all agree that 1971 would not be applicable given where we are in 2026 and given the growth and the momentum that the credit union movement has seen over the decades. But what would have been the challenge with the 2014 legislation that you felt, it could not in any way be revised or updated to make it more suitable for what the credit union movement has evolved, that then took us to 2024. So you spoke to the 2024 proposal for the independent authority, but the 2014 legislation that sought to give greater regulatory oversight, if you can just kind of share some thoughts from the league's perspective as to why that was not considered to be adequate.
Actually, some of the issues that arose in that 2014 proposed legislation would have been, one of them was the governance of the credit union, where it fell, and in terms of the legislative framework that deals with it. One of the proposals was for it to be governed, to fall directly on the central bank, with rules that are akin or applicable, I would say, to the banking industry. Hence, I used the phrase earlier with respect to the one fit for the credit union movement as opposed to the banking legislation. So that was one of the issues that we took issue with in the context of its ability to assist the movement in growing and also stymie the movement. There are some other issues which I will want to defer to our CEO, who was very much intimately involved in that particular discourse, and she will be able to bring some more clarity to that position.
Thanks, Mr. Neptune, but before we get to Ms. Joseph, maybe I just want to include this here. The recommendations of the 2019 Ministerial Subcommittee, so I heard you, make the comment about the regulatory under the central bank, and you felt while it was appropriate for the commercial banking sector, it may not be appropriate for the central bank to have oversight of the credit union movement. But in the recommendations of the 2019 Ministerial Committee, it says the authority will report to the Minister of Finance. Was there also concern with the Ministry of Finance?
No, please, Madam Chair. There was no concern or issue with the authority reporting to the Ministry of Finance.
All right, and that remains, if it's the Ministry of Finance, that remains acceptable?
Position?
Yeah. Okay.
Yes, please.
All right.
Yes,
okay.
Madam Chair.
All right, okay. So, Ms. Joseph, I think the President wanted you to provide some clarity.
Thank you, Chair. In addition to what my President just articulated, one of the concerns also in 2014 was the issue of the Prudential standards with regard to an 8% institutional capital requirement that the movement had been negotiating, along with what the bank was proposing, which is 15%. Eventually, we did agree to 8% with minimum flow. In addition to that, they were looking at 80% of the board of directors of a credit union.
Just to be clear, let's when we use, if we can clarify the pronoun they, so that, because remember, people who are listening may not understand who the they are. Who was there? Mm-hmm. So let's just ensure that we have the clarity, please. Thanks.
The Central Bank of Trinidad and Tobago were proposing 15% institutional capital. We were of the opinion that based on the size of credit unions from very small to extra large, that percentage would have been too high. And we looked at our WACU model and negotiated with the bank, following our discussions, an 8% minimum flow. Also, the central bank was proposing that 80% of the board of directors of a credit union must possess formal training and competency in law and business and accounting and other competencies that we felt would not have worked for some of the smaller credit unions especially. And we were suggesting, and I think it is in the PPD now as well, maybe 1/3 of the board of directors. And hence we considered that to be inappropriate for credit unions. And as my president said, we were speaking to the issue of being under the Ministry of Finance as we are talking now, but before it was under the central bank, which we believe that would not have been appropriate for credit unions. We were of the opinion that the bank does not fully understand the operations of credit unions, and in sitting with meetings with the bank, they were actually seeking to understand how we operate and what we do at the level of the credit unions. And there's where we had started the conversation about an independent authority reporting under the Ministry of Finance.
Okay, thanks for that clarification. In that context, and given what you've described, where then would the role of the Commissioner's Office, would there not have been an opportunity for the Commissioner's Office to fulfill that particular role?
Chair, in the context of regulator?
In the context of providing oversight. Because I want us to understand, as it stands now by law, the Commissioner's Office is the oversight regulatory body. Yes? As it stands by law, we acknowledge and we accept that 1971 to now, a lot has changed in the financial landscape and in the ecosystem, so there is need to revisit that initial legislation. And we've gone to 2024 with the independent authority, and I'm saying, where in the League's view does that place the Commissioner's Office in terms of that regulatory oversight? So let's take the central bank out of the conversation. Let's take the Ministry of Finance out of the conversation. And I'm asking a question now in terms of the Commissioner's Office in the Ministry of Labour. Where do you see the Commissioner's Office? Because on the last occasion, we acknowledged, P.S. Willis and her team would have acknowledged readily, that there are challenges in terms of resource constraints, et cetera, which is again why I would have welcomed Ms. Scott, as she has now anchored that position, and there's now a full-time commissioner occupying that space, an appointed commissioner. So I'm asking the League, where do they see? So there is the independent cooperative authority that has been identified in the policy development document. Where in that framework will the Commissioner's Office reside?
Chair, in the context of the Commissioner's Office, our understanding, and based on discussions at the implementation team level, our understanding is that the Cooperative Development Division would have been a part of that independent cooperative authority when or if it was formed. In our proposal, we did indicate in the event that the independent cooperative authority is not pursued, we would be happy for the upgrading of the Commissioner's Office to continue the role that they perform now as oversight for credit unions. And we also made it very clear in our submissions that they should be outfitted with the right competency and skill set and all developmental tools and initiatives to help support the cooperative credit union movement. We believe at this time the division is not adequately resourced, and some of the skills and competencies are below those that the credit unions possess. And as the regulator, they should be upskilled accordingly so that they can adequately oversee the directors and others at the level of the credit unions.
Thanks for that, Ms. Joseph, and I'm smiling because a short while ago you said that the central bank's proposal to have board of directors with particular skill sets in particular areas, you felt that those were too much, and now you're saying that the Commissioner's Office needs to be upskilled to have some of those skill sets. So I'm smiling because I realize that We want to achieve the same thing. We want to have the best possible oversight and regulatory framework for the credit union movement. But I think it's getting to that particular point of what is palatable, I think, is where the challenge is, because the central bank has those skill sets embedded by its act and by the way it functions and the regulatory oversight that it provides. And the ministry of its own volition acknowledged that it is trying to fill some vacancies, and I can't remember the number, but on the last occasion, the ministry readily acknowledged that it has some challenges in terms of filling its human resource complement to fulfill its obligations as embedded in the Act. But I think the substantive issues that we do agree that as it currently stands, the credit union movement requires some regulatory oversight given how it has grown. So I want to get back to your submission in terms of some public statements that have been made in terms of the current state of the credit union movement. So the credit union sector holds approximately $20 billion in member assets, and it serves over 700,000 member accounts. Am I correct? Yeah? Does the League consider the existing regulatory guardrails, including Prudential standards, to be adequate to safeguard members under the wider financial system? And I think the answer to that is no, because you've already stated no, and I would wish for you to say it on record as opposed to nodding, that you agree that you don't currently have the appropriate guardrails and Prudential standards.
Yes, Madam Chair, that's a fair and accurate assessment, Madam Chair. That we think that the regulatory framework as is now is not sufficient to treat with what the credit union movement has become.
All right. But the League has also described in recent public utterances carried in the media that it's a safe haven for members. So in light of the acknowledged limitations of the current legislative and supervisory framework, included in the limited enforcement powers, delays in audits and inspections, and the absence of mandatory deposit insurance, how does the League propose, given resource constraints all around? So the Commissioner's Office has resource constraints. The independent authority is not established, and it's not established anywhere, and it's not likely to be established anywhere in the near future because it's still in its nascent conceptual stages. How then do we fill that lacuna in the credit union movement and in the financial landscape? Because remember what we're trying to avoid, which is why I think the history is important. 2008 was a stain on our financial landscape. We don't ever want to return to that kind of space. But we acknowledge by your submission that the credit union movement has grown significantly. We're talking about $20 billion and more than 700,000 persons in terms of its membership. How do we address, given the state of the economic landscape that we're in, how do you propose that we put something in place to give ourselves and our membership the comfort, and I'm using the royal we here because we're all part of the national economic landscape, how do we give our members the comfort that we can get to some point of resolution, which is why we're having this inquiry, so that we can have the safeguards and risk mitigation mechanisms that we agree, both the League and the Commissioner's Office, that we agree are important and urgently needed?
Madam Chair, I think in the immediate term, what is required would be some amendments to the existing regulatory framework, whether it be through amendments to the Act itself or by the issuance of some regulations, which is, I would say, more readily doable on short notice, some regulations that require certain things be done in the movement, for instance, mandatory insurance deposits and things of the like. And once we get those immediate, I'd say, improvements, that would offer some protection in the immediate term with respect to the movements and members' funds and so on.
Thank you. I was so engrossed in the conversation that I didn't realize that my colleague, Member Sicharan, had a question. So I now invite him to pose his question.
Thank you, Madam Chair, and good morning to you all, the Ministry of Labor, as well as the Cooperative Credit Union League of Trinidad and Tobago. And my question to you, sir, Mr. Neptune, in your estimation, is this sector financially sound?
I would say yes, it is.
Okay, so now the reason we are here is to discuss proposed legislation. One part of the reason we're here, proposed legislation for the sector. And according to the submissions I see before me, it is saying that only 60 to 65% of credit unions are fully compliant with statutory audit submission timelines. So if only 60 to 65% are only fully compliant, how can we be sure that the sector as a whole is financially stable, given that it's roughly $20 billion?
In terms of I would say the compliance in the submission of the documents, yes, we admit that not all credit unions are compliant in terms of that. That is for a number of reasons. Some of the issues have to do with resourcing. Some of the issues have to do with the timely production of the report. Now, at the end of the day, in the context of the movement itself, there are a lot of built-in safeguards in the movement in terms of, we want to use the term self-regulations, where we adhere to the PERS ratio, that's the assessment we use in terms of the movement to manage and to assess the status and the viability of the movement. And based on our regular audits too, in terms of the league's audit and requests of information from the credit unions, which are readily provided, we have not seen anything in our documents we write out that suggests that there's any fundamental flaws or weakness in the movement for the most part.
Great. So, I understand that, you're referring to the sector as a movement, but, it's really a financial sector. It's part of the financial sector at Trinidad and Tobago. And what I'm concerned about really is, I'm seeing here that you're asking for a 3 to 5 year grace period before credit unions may join the deposit insurance scheme. And what that would mean in some instances is up to 5 years, shareholders in these credit unions may not be insured.
But let me say, for a lot of our credit unions right now, they are in fact covered by insurance in terms of their deposit accounts, their shares and so on, that they have taken privately with whether be it CUNA, whether be it other insurance coverage. So there's in fact coverage to a large extent in the movement, as well as the QDF Trinidad and Tobago Deposit Insurance Fund, which is I would say a creature of the movement. And I use the movement, yes, I'll use the movement, because that is what it is. Yes, we understand that we are a financial institution, but it's really a movement. Hence, I spoke to the unique nature of a credit union from inception to now. So there isn't any significant number of credit unions that are not covered by some sort of insurance for their members' shares and deposit, even as we speak. And we spoke to a grace period, for want of a better word, because we felt that there's some, based on the cost and so on involved, some credit unions may need to phase that in, as opposed to a particularly smaller credit union, as opposed to being directed from tomorrow, they need to pay X amount into a deposit insurance fund when there's some coverage already available.
Right. So, I understand your focus would be to advocate for the credit union movement or sector. But, our job is to protect the citizens of Trinidad and Tobago, because you all are part of a bigger pie, so to speak, As the chair mentioned, what happened with Hindu Credit Union, that is something that really cannot happen again in this country. And, I'm also seeing here, quite concerningly, is the fact that the league is objecting to the emergency liquidity facility entirely, rather than having it as an option for all credit unions.
Chair, before I defer that particular part to my CEO, let me say that at the League, in addition to our advocacy, we also view our role as being protective or protecting members' funds. It is that we believe that the two are inextricably linked because we are concerned also about the welfare of our members and their funds. So we share the committee's position that we need to protect the members' funds. So I just want to say that before I defer that particular question to the CEO.
Okay, but you see, you say you have a rogue credit union that's not adhering to your advice and your counsel. What is the situation for the shareholders then?
So, as I indicated earlier, we don't have legislative authority. We can advise, we can recommend. That authority falls to the Commissioner's office. We have, in the past, when we encounter, I would say, challenges, we have written to credit unions before with respect to their failure to provide their financials on time, and we have also advised the Commissioner's office of our position. Some time ago, we had engaged in quarterly meetings with the Commissioner's office to assist in that same process, because if we are asking and we are attempting to support, then we defer to the regulator, who has the authority to go into the credit union to ask questions and or sanction. So we can only advise in that regard. So once we get the information, we realize person non-compliant, we pass it to the Commissioner office, because at that stage, our hands are literally tied.
Okay.
I think Member Danpole had a question, and then Member Manning.
Thank you very much, Chair. And good morning, everyone, again. Ms. Scott, as the Chairman said, congratulations on your recent appointment. And forgive me for asking you this question. What did you do before becoming Commissioner?
I was the cooperative officer responsible for the supervisory and regulatory unit at the Commissioner's office, at the Cooperative Development Division.
Within the unit itself?
Yes.
Mr. Neptune, based on the information you supplied to the committee, you said the regulator must possess a skill set as at least commensurate with the sophisticated financial leaders they're required to oversee. These are your words. So you continued, our goal is a regulator that is independent, well-resourced, and technically competent to oversee the sector without the bureaucratic delays inherent in the current ministerial structure. Your words again. However, the World Bank's financial assessment program, are you familiar with it? The FSAP, as they call it. It was really at the request of the Central Bank and the Ministry of Finance in 2020. They recommended that primary responsibility for the oversight of credit unions should be assigned to the Ministry of Finance, and that the Central Bank's involvement should be to develop a specific legal framework for the regulation and supervision of credit unions, including the establishment of a new credit union supervisory authority. You're familiar with that. But then you are suggesting that this body called the Independent Cooperative Authority should be the body to do it, not the Ministry of Finance and not the Central Bank, because you feel that these agencies or these departments or these they don't possess the skill set necessary to regulate the credit union movement. Am I correct in saying this?
Not totally accurate answer.
What would be the
right.
what would be accurate?
So our position is in the policy proposal documents that speak to the Independent Cooperative Authority, it speaks to representatives from the Central Bank, it speaks to being under the Ministry of Finance, it speaks to representative from the authority, a representative on the authority that forms the authority from the cooperative movement, as I said, the Central Bank, and other areas, the Ministry of Finance. We are not saying that we don't want to be regulated by the Ministry of Finance. We are saying that the nature of the movement must be taken, or the credit unions must be taken into consideration in the context of that. Now, the report to which you have alluded to, we see the proposal with respect to the Independence Cooperative Authority being in compliance with that proposal, because it is supposed to be under the Ministry of Finance, and again, it's supposed to have representatives from the central bank. If my memory serves me correctly, it's probably 3 representatives from the central bank, as well as the Ministry of Finance, the movement, as well as other stakeholders to form that authority to govern the movement. So we see that as being actually in compliance or following that direction, that recommendation by the World Bank.
Are you aware that the insurance industry used to be regulated by the Ministry of Finance before it moved across to the central bank?
I'm not aware of that, sir.
I'm telling you now. And the transition was smooth. Okay? Are you aware that when the Hindu Credit Union collapsed, the league did not compensate the depositors? True or false?
Did I hear this? The league didn't compensate the depositors?
There was no connection to the league when the Hindu Credit Union collapsed. The taxpayers of Trinidad and Tobago compensated the depositors.
Well, the league, that was not a responsibility of the league to compensate. That was not our role.
I understand
So
that.
I'm aware that there was no compensation flowing from the league towards the depositors.
Correct. The taxpayers of Trinidad and Tobago had to pick up the bill. Right?
Yes.
Essentially because there was not enough supervisory oversight. Or insurance. Correct. Right? That was one of the major issues. Do you know how much that cost the taxpayers of Trinidad and Tobago?
I'm not aware, sir. I'm not aware.
Close to $1 billion TT dollars. Right? I'm not even thinking about the cost of the commissioner inquiry. I'm not even adding in that cost. There was a commissioner inquiry into a credit union in Trinidad and Tobago. Right? And you know, the public will think that credit unions are usually small depositors and small accounts. There were $100 million accounts in the credit union that had to be compensated for by the taxpayers of Trinidad and Tobago. This is not an ordinary. This is a $20 billion industry, a $20 billion sector. I'm not too sure how independent your independent cooperative authority will be. Okay? And I'm not too sure if you're right in saying that the Ministry of Finance and the Central Bank cannot understand what this thing is about. If they don't have the skill set, they will get it. We cannot go through $1 billion issue again. It's as simple as that. We cannot, whatever these institutions need, they will get it. And I detect from you, and I've detected this over the years in my previous incarnation at the Ministry of Finance, I've detected a fear of the league in being regulated by either the Ministry of Finance or the Central Bank. Would you like to explain that?
Well, let me remove that perception. There's no fear by the league of being regulation. We have no issue with regulations. As we have said, we have invited regulations, and we are not saying that the Ministry of Finance cannot regulate the league. And if we are speaking about I would say the failure of Hindu Credit Union and the loss of funds, we are the league. We have accepted, and we have said we have absolutely no objections to mandatory deposit insurance coverage for credit unions, which would mitigate against, quote unquote, in the event of failure, the taxpayer bearing the burden of repaying members' funds. We have no issue with that, and that is something that can be implemented almost immediately. in the context of the direction of the...
But I'm glad you said that, because a little while ago you said that, not all credit unions will be able to move to that insurance. So what is preventing that immediacy that you have just articulated? What is preventing that kind of mandatory insurance system? Because a little while ago, a few minutes ago, you said that, some of them have private insurance, will need some time, et cetera, et cetera. But you've just said that there is an urgency to get that kind of coverage to avoid the fallout that we witnessed that the country paid for back in 2008. So what is preventing that kind of mandatory, urgent approach to deposit insurance?
As it stands now, it's not a mandatory requirement by the law. That's what I'm talking about in terms of making, which was a regulatory intervention that's saying, listen, each credit union is required to do this now. And when I spoke to this now, in the context of being a phased approach, was to assist some of the smaller credit unions who may not be able to go it immediately and whose deposits may not be, I would say, significant, because the $20 billion is made up of several credit unions. It's not, I'll say, within the control of one or two credit unions, several credit unions. So I'm saying that if it is that it can be done, and let's say the Commissioner's office, I'm not too sure whether or not the regulations provide, that can say, listen, with effect from January the 1st, 2027, all credit unions will be required to give evidence or to provide evidence of mandatory insurance deposits or coverage, then that is what it has to be. So we are not afraid or saying that Ministry of Finance can't regulate us. We maintained before that what was attempted was to impose the regulations or the laws that governs banks and credit unions, which is a different criterion.
I'll come back to those statements, but I know that Minister Member Danforth.
Just one final question for me, Chair. Of that $20 billion, right, that in sector, would you say the top three, what percent do you think the top 5 credit unions would account for? Anyone?
I won't be able to say what the top 5 has. However, 75% of that 20 billion, which would be about $15 billion, is captured by about the top 20 credit unions.
Credit unions account for 75%
of the asset base.
Thank you.
Member Manning.
Thank you. Good morning, everyone. Good morning. Of the $20 billion in assets, could you say where the majority of those assets are invested? Or are they invested at all?
I do not have the figures before me. However, based on the Prudential standards that credit unions voluntarily adhere to through their PEARLS monitoring management system, 70 to 80% of their assets are generally in loans. Now, we do have societies that have much less than that 70 to 80%. They may have 47 or 52% in loans. The standards also speak to 30% being in other assets, which includes investments in
It's the
real
other
estate.
assets that I'm concerned with.
The real
What
estate.
are the other assets?
Real estate and other financial investments. Now, based on what comes to the division for approval, you all had the discussion on investments last day. Most of them are the majority of them are in secured bonds, secured by the government of the Republic of Trinidad and Tobago. Those are the ones that would come to Commissioner for approval under 45D. And So that I'm saying that most are secured investments. However, they do come to the Commissioner's office. Of course, under A, B, C of 45, there would be investments that are not required for Commissioner's approval. So in the bank, in other securities, those things are not.
Basically cash or some
Yes,
other liquid
or close to cash.
Okay, because what I've been reading is that the credit
Government
unions have
bonds.
been getting more and more involved in more sophisticated types of investments.
Yes.
And it's a $20 billion asset industry, which I think we'd both agree does present some degree of systemic risk to the financial system of Trinidad and Tobago. If something were to go bad here, it would be significant.
Well, yes,
You agree?
I agree.
Okay.
Not
To
to
an
put you on the
extent.
spot or to add to the spot that you might be on, but on the last occasion, the Commissioner's office, the ministry did confirm that they weren't satisfied that they had the requisite skill set to evaluate all of the investment proposals that came to them. I mean, I know you weren't here, but I don't know
Yeah,
if
but
Mr. Moore,
I
if PS may wish to confirm or deny, but that is my recall, that the Commissioner's office said that they admitted that they did not have the requisite skills to evaluate all of the investment proposals that came before it.
The investment requests that come before us are evaluated by our officers in the division.
Skill set, I'm talking about skill set, not evaluated. Let me be very clear. I know that there is some evaluation that takes place. My specific question is about, so Member Manning spoke about the types of investment and more sophisticated investments. I'm asking you, and perhaps let me phrase it differently. So since you are now sitting in the office and you now hold the office,
Yes.
are you satisfied and can you give this committee the comfort that the Commissioner's office possesses the requisite skill sets to evaluate the proposals that come before it for investment from the credit unions?
Yes, I am.
All right, so could you share with us what those skill sets are that currently exist and the kinds of proposals that are being evaluated?
All right. Let me just turn my piece right here. The current investment officer at the division has relevant experience in commercial credit, financial.
No, could we not use words like relevant? Could we be very, very specific what the
Okay.
qualifications are?
So he has a BSc in economics from the University of the West Indies. All right. The investment approvals that come to the,
Sorry, that's it? BSc Economics?
right. So I was going on now.
Okay, all right, okay.
He is also assisted by the cooperative development specialist behind me, Mr. Moore, and by our accountant 3 in the department who is ACCA qualified. Right. So yes.
If I may, just to read what was presented to us on the last occasion, so that it gives you some context.
Yes.
We were told on the last occasion, and this is not quite verbatim, but close to verbatim, oversight of investments is severely constrained by limited human resources with only one investment officer currently responsible for reviewing investment proposals across the sector. The absence of prudential safeguards such as asset liability matching requirements and risk-based capital frameworks was identified as a major vulnerability. So I just wanted to add that as some flavor in terms of what you're saying is at variance with what was said on the other occasion.
Yes.
All right, so yes, you're now sitting in the chair, so if you can clarify for us for the record, yes.
So we've clarified and we've made sure that these are the measures that are used within the division in order to give Commissioner the comfort for signing off on investment proposals by societies.
Thank you. All right, so
I just wanted to say that, to continue, that investments that come to the division, I wanted to give some statistics. From January to December 2024, 61 investment approval requests processed in the division had a total value of $384.81 million. All of them were in financial instruments. The monthly average was 5 approval requests totaling approximately $32.1 million. So our investment requests do not go into billions of dollars. They're in double-digit million of dollars. January to December 2025, we had 33 investment approval requests processed at the division. Total value, $138.2 million. 6 were property purchases requested, and they were $31.1 million for the property. And the investment security approval request totaled $107.1 million. So the average on a month was 3 at approximately $11.5 million. Of course, we use the standards of the 70 net loans to total assets of the 70%, and the other assets, which include, as I said, financial instruments and real property at less than 30%.
Thank you very much for that, Commissioner. I want to get back to a point that was raised by Mr. Neptune, and I think Commissioner also alluded to it. I think in sharing the investment data, Commissioner said that they're not particularly large, they're a couple double digits. And I want to respectfully suggest that persons who, and it's a point that Mr. Neptune keeps making, persons who deposit in a credit union, whether it's $1,000 or $5,000 or $10,000 or $1 million or $2 million, it is significant. And it is therefore with that in mind that we're making the point that everyone needs to be covered, not just the large depositors, but the small depositors for whom, and small is relative, for whom that could be their life savings, which is why I think the regulation is important. Now, Commissioner, I want to give you the opportunity because you've opted to disagree with what was presented by the ministry on the last occasion. You've opted to disagree with them in terms of their suggestion, their statement. It wasn't a suggestion, it was a statement that they lack the resources to do the requisite investment. So you've opted, now that you're sitting in the chair, you've opted to disagree with what was said on the last occasion. So I want to ask you squarely, do you think that the Commissioner's office is adequately resourced to fulfill the regulatory oversight that is embedded, not just the legislative framework, because we recognize things like the fines, et cetera, they really are. I mean, if I have multi-million-dollar assets, $2,000 fine really it's not significant. How do you see the Commissioner's office positioned to provide the kind of oversight that is required in 2026 and moving forward, given the size of the organization, given the size of the sector?
Given the size of the sector, while the division continues to do what it has to do under the Act, yes, the resources could be optimized, could be increased. And it's not just human resources.
Absolutely.
Yes. We require a lot more in terms of management information systems, the ability to analyze data without
enhanced technical competencies, yes. Technical. If you can be very specific, because remember we're trying to tease out from this conversation, where do we go from here? Yes. So if I can ask you to be a little more specific, whether it's technical, technological, what precisely are you referring to?
So yes, technical and technological advances would be required in order for the Commissioner to fulfill its role in efficiently to take the movement forward, or even to regulate at this point in time.
And do you think, given that there was a memorandum of understanding or cooperation, I forget the specific documentation,
With Central Bank, yes.
between the Commissioner's Office and the Central Bank, do you think that there is still an opportunity to reinforce that, to implement it, to elevate it to some greater sort of, given where the credit union movement is now?
Yes, we want to revisit that particular document and add some more meat to it in order to collaborate a bit more, do more together. The one with FIUTT as well, we're currently looking at that one to advance some closer collaboration between the two parties.
So as I understand it, clearly you've really assumed as Commissioner. As I understand it, what you're looking at is greater collaboration with both the Ministry of Finance and the Central Bank of Trinidad and Tobago, because you recognize that this is a sector that can't continue to be unregulated because of how significant it is in the financial landscape of Trinidad and Tobago.
I totally agree.
All right, thank you very much. Other questions?
Sure, I have a follow-up question here for the Commissioner of Cooperatives. The diagnostic for non-financial cooperatives, Minority Report Item 2, page 2. A, can the Commissioner confirm whether this diagnostic has since been completed? And B, if yes, was it shared with the League and other stakeholders to inform their input?
I'm sorry, I do not know.
Is there any other member of the delegation who might be able to provide some insight?
Yes, Chair. The diagnostic for the non-financials was not completed. The implementation committee wrapped up its operations in September of 2024, I believe. And there were some matters that still had to be addressed, but the committee was dissolved so that I guess when the new government would have come in 2025, early 2025, that would have been one of the items on the agenda, so that that particular project was one of those projects that was not completed.
I just want to go back to a comment made, I think it was by Mr. President Neptune, in terms of pearls. And my question comes from an article in one of the business supplements from January the 22nd, 2026, where credit unions are described, and the article is attributed to comments from the League. And the article says that credit unions are a safe haven. And I want to ask, well, several parts to my question. How does the League reconcile its claim that credit unions are a safe haven with the comparatively weak enforcement powers and minimal statutory penalties, the $2,000 I referred to, and the League's response to that question that was sent to you in terms of preparing for today's inquiry? The League's response was that the credit unions as a safe haven reflects public perception, and that perception is grounded in the empirical reality of our capital reserves and the pearls' performance. And I want to reconcile that statement with what I believe is a statement attributed to the League, captured in correspondence dated May the 24th, 2024, addressed to Mr. Edwards, who's the chairman of the implementation team, or was the chairman, is or was chairman of the implementation team? Was chairman of the implementation team. And in that submission, in that communication to Mr. Edwards, there's a paragraph on page 4. I don't know if you have the same document. Well, this was sent by you, so I imagine you were in possession of that. It's the communication dated Wednesday, May the 24th, 2024. And it's under the subsection that reads, the reliance on pearls as a regulatory tool And the paragraph reads inter alia that the movement is of the view that the PEARLS ratio was developed as a management control tool and is aspirational in nature. It is not a regulatory tool. As such, the rigid adherence to the PEARLS ratios for legalizing of the prudential standards has the potential to create unnecessary challenges for credit unions. So I'm trying to understand which it is. PEARLS is or is not it? And again, for persons who might be viewing, listening, could you clarify what is PEARLS? And then if you can just move on to elucidate and to clarify for me whether PEARLS is the basis on which the League describes the credit union sector as a safe haven, or whether it is something that is not quite fit for purpose.
Well, Madam Chair, can I defer that question to the Chief Operating Officer?
Absolutely, yes.
Thank you, please.
Madam Chair, with regard to PEARLS, yes, the League uses the PEARLS ratios as one of the major benchmarks for credit unions. It assesses the protection, effective financial structure, assets, asset quality, rates of return, liquidity, and signs of growth. And that tool is what determines the strength of the credit union using their audited financial statements. In cases where you don't have readily available the audited financial statements, the management accounts of the credit union. And as of now, there is no credit union that we have assessed using a PEARLS monitoring tool that reflects any system of risk. With regard to the ratios, the PEARLS standards.
I just wanted, again, I want to move away from ambiguous terms like many. Could you give us a sense of numbers, the ones that you have assessed, et cetera? Sense of numbers. We have more than 100 credit unions, correct? So give us a sense of the numbers inside of there, because there's a previous statistic that says you have 60-something% non-compliant in terms of submission of accounts. So I need to be very clear in terms of what we're discussing. But my question also was about what appears to be two contradictory statements in terms of the robustness of PEARLS, and this is not in any way to undermine the movement in terms of how you're operating. Our remit here and our function is to ensure the best possible way moving forward, not for the movement as an inanimate sector, but for the people's money. Member Sitcharan made the point about members and safeguarding people's money. That is what we're about, to ensure that we have the best possible system in place to safeguard members. So my question was about, yes, some clarity around the PEARLS itself, which is useful for the persons who are listening and viewing online, but I want to reconcile the two, what seems to me to be contradictory statements coming from the League in terms of the validity and the veracity of the PEARLS as an indicator of strength in the sector. And if I could repeat again, in responding to the questions that came from this committee, the question was posed to the League in the context of our objective to assess the adequacy, effectiveness, and enforcement of existing supervisory, regulatory, and governance arrangements, etc. And the question that was, the specific question flowing from that objective that was posed to the League was, how does the League reconcile its public claim that credit unions are a safe haven, etc., etc., etc. And the League's response was that describing the unions as the sector as a safe haven is based on public perception, and that perception is grounded in the empirical reality of capital reserves and the PEARLS performance. And I'm asking you to reconcile that with a statement attributed to the League in 2024 that says PEARLS is a management tool and is aspirational in nature. It is not a regulatory tool, and as such, the rigid adherence to the PEARLS ratios for legalizing of the prudential standards has the potential to create unnecessary challenges for credit unions. So I'm just seeking that kind of reconciliation and clarification from you.
Okay, Chair, I think I now am better understanding the question. Let me deal with the first part. In terms of the perception as a safe haven, yes, we hold that position, and it is also the perception of our members that the credit unions are safe haven in the context of not only the PERLS ratios, but also the social aspect and the services that credit unions provide for their members. The public statement in the Business Guardian referred to members traditionally describing their credit union as a safe haven, which we agree with. In addition to that, we are saying it is grounded in the evidence of PERLS. In terms of the numbers, the last we have is 78 credit unions using PERLS, and when we were working
78 out of?
78 out of 126, and that's the latest number. And when we were working on the diagnostic tool for the implementation team, 98 credit unions. Out of that, we have seen no credit union. Actually, the research done by Kyrie Consultants showed that credit unions were liquid and they were adequately financial or in a strong financial position, and that they can continue to do more.
You know, that was never the issue. We recognize that credit unions are liquid. Our concern is the adequacy of the regulatory oversight. That remains our concern. It's not about the question of the liquidity, etc. It is about the oversight and the regulatory, precisely because of the fact that so many people are seeing, as you said, your members are seeing this as a safe haven. And you're safe until you're not safe. It's like cricket. If the umpire says that you're not safe, then you're not safe anymore. So we want to ensure that there is sufficient regulatory oversight so that people can continue to be comforted that in the fact that the credit union movement is a safe haven for them and for their and for their savings. Would you not agree to that?
Chair, I do. And we are reiterating that the League supports stronger regulations for credit unions, and that is clear in our position on the PPD as well. However, we hold the view that while that is taking place, it does not mean that the credit union is lacking in terms of what they do in terms of their day-to-day operations. They are self-regulating, and we are monitoring to ensure, as far as it's practical, that there is no risk that we know and will allow.
We are monitoring, meaning the League is monitoring.
The Cooperative Credit Union League
and the Cooperative Credit Union League, as we've established from the outset, really doesn't have any locus standing, doesn't have a legal authority, no regulatory body. So if you see something going awry, you need to report it to the Commissioner's office.
Yes.
And then the Commissioner then has to intervene.
Correct.
So there is need for the Commissioner's office to really have the direct, shortest distance between 2 points. The Commissioner's office really needs to have the resources, and I think the Commissioner has just said that they are looking forward to the opportunity to strengthening their regulatory and oversight with support from the Ministry of Finance and the Central Bank of Trinidad and Tobago. I'm quoting you correctly, Commissioner.
Yes, you are. I should also say that capacity building has begun in the division. We've had a lot of training going on for officers over the last couple of years, and that continues. Just last week, we had some CAMEL training again with our officers. CAMEL, of course, is a supervisory tool for credit unions. So it stands for capital adequacy, asset quality, management efficiency, earnings, and liquidity.
Thank you, Commissioner. Member Sitcharan.
Thank you, Madam Chair. And I make note that the Cooperative Credit Union League has stated that they are in favor of greater regulation. But according to the report, there are 19 areas of dissent that the League has indicated. And I would just like to go through a few of these for the viewing and listening public. The League has opposed mandatory ownership shares, saying that they burden members. The League has also disputed the classification of ownership shares as equity. The League has opposed 3-year term limits for the Independent Cooperative Authority board members, preferring unlimited tenure. The League has also opposed higher capital adequacy thresholds. The League wants greater borrowing flexibility for credit unions. The League has also opposed stricter prudential ratios, arguing that they stifle growth. The League has opposed strict investment limits and disposal timelines. The League has objected to the ICA's role in provisioning for delinquent loans. The League has requested a 3 to 5 year grace period for joining the deposit insurance scheme. The League is also opposed to the ICA's role in mergers, and the League has opposed the Emergency Liquidity Fund facility, saying that credit unions already lend to each other. So when you are saying that you are in favor of for more adequate regulation, what regulation you're looking for? Because it seems that you're opposed to anything that would financially regulate this industry. And that question is to you, Mr. Neptune.
We are not opposed, to use your words, every financial regulation for the industry. We have supported several other regulatory adjustments in the same policy proposal document. What that minority report speaks to, as you correctly said, something that we are not satisfied with in the context of introduction, because we believe that it would present some challenges going forward. Now, again, at the risk of repetition, I'm saying that we have supported several other proposals with respect to regulatory framework. Hence, the policy proposal document, those are just the items that we didn't necessarily agree with, and there are a number of reasons that we didn't agree with some of those items to which you have alluded to. So it's not that we are opposed to every financial regulation or introduction of financial regulation that governs the credit union. The deposit, as I said, we didn't oppose the deposit insurance fund. We just asked some time for some members to transition to it. So we're not opposed to it at all.
But would you agree with me that in opposing a number of these financial measures, the shareholders of some credit unions may be at greater risk?
I don't necessarily agree that they'll be at greater risk. Yes, it will present some risk, but not at greater risk, because a lot of those things don't exist now, and we are saying that yes, we need strengthening of the legislation, we need some more regulatory framework, but it's not that there'll be a greater risk, in my respective view, that if it's not included.
Sorry, Mr. Neptune, with all due respect, you do not believe that there's greater risk here, even though there's no mandatory insurance in credit unions, but there is in the banking system. Also, when I look at your governance, which concerns me quite a bit, why would the League not want to have an improvement in qualification of directors within the credit union movement, when that means better management, it means better confidence by the general public? People would feel more, feel safer depositing their money in credit unions. When I hear things like lifelong directorship, that causes real concern. I don't think there's a single benchmark or metric for governance that says that board of directors should be there for life. So when you say that there's less risk here, I would have to ask you how.
Well, I didn't say there's less risk. What I said was I don't agree that they were at greater risk. And that's what I said. And the other thing I said also, we do not oppose mandatory deposit insurance. We do not oppose it. So that is not.
But you also don't make it mandatory.
No.
When the banks do.
No. I said in one of my earlier contributions, we have no objections to it. I said we can't enforce now. This is not a legislative requirement now, so we can't enforce that person, but we do not object it. And with respect to the qualifications for directors, there are several directors sitting on boards now who are the holders of master's degrees and doctorate. What we objected to in the initial proposal was the percentage of the board that was being asked to be 80% of the board to possess a particular qualification in law or something like that. That's what we objected. We didn't object to qualifications of the board.
And my question to you, sir, is why would you not want the entire board to be up to a standard where that the institution can now feel comfortable investing in maybe more sophisticated investments to improve and give confidence to the depositors of the credit union? It is a vast difference if there are people qualified in finance and investment on a board, as opposed to laymen who have just as much of understanding of an investment as the average person does on the street. Who am I going to give my money to? The person who is qualified and experienced in making investments, or the person who isn't?
Well, again, I'm saying that at present, there are persons with those set qualification and or competencies sitting on boards now. Not at the level at 80%, surely, but there are persons with those same competencies that sits on board now. So we are not objected to, and in any event, one of the things, the options available to boards is in fact co-opting of persons. So to the extent that a particular competency does not reside in the board, it can be sourced otherwise, as occur now in terms of persons who make up committees like finance, risk and investment committees, sitting in credit unions and so on. Those competencies can be in fact sourced. And just one other thing that was mentioned earlier, there's nothing in the credit union movement that speaks to a lifelong member of a board. Absolutely nothing.
Okay, but you just said there were no term limits.
No, there are no term limits for some credit unions. Okay. A lot of credit unions have term limits of 3 to 9 years are the outer limit. A lot of credit unions have that built in their bylaws. But the members of a board are elected by membership, so the membership elects persons sit on the board. But there's nothing that gives any director a lifelong membership of any board.
Right, but the members get to elect the people who are available to them. If there are a certain standard, then some persons would immediately be not eligible to be directors on certain boards.
Well, I sit in a particular credit union where there are persons who have presented themselves to the for election and have certain qualification and the concurrency are not necessarily elected. So the terms of, and that's some of the smaller credit unions.
That's the concern. Huh? So in your words, do you believe what would be the best interest of the depositor? Having a highly appropriately qualified board of directors, or one that includes people who are not?
Well, it's the issue, that question presupposes that once the board has somebody who is the holder of a master's, or somebody who is not the holder of a master's, or for that matter, a doctorate, that automatically makes the board more qualified. I'm saying that there's a combination of two. It's a combination of the board. Yes, you need persons with certification, I'm using that term loosely. You need persons with the competencies and the skill set. Yeah, but what we are saying is that from the movement perspective, it should not be a board that you are saying that you want a board with persons with only these qualifications. Then that eliminates other persons who might be otherwise able to contribute to the development of the movement. Bear in mind where the movement came from and what the movement is about. There are other persons who might be able to contribute who may not be necessarily holder of a master's.
But if I may, Mr. Neptune, going on recall, and you can correct me, the central bank's proposal, the 2014, was 80%.
80%.
80% is not 100. So it gives 20% in terms of those persons who may not be qualified, but who may bring other skill sets to the board.
And I agree.
And wouldn't that be something that, could help, the cross-fertilization could help sort of improve the governance and the functioning of the board in the interest of its members?
And I have no objections to that, but we are saying that in terms of the context of the numbers, we are saying that 80% would necessarily eliminate several persons, and particularly in the smaller credit unions.
80-20, and I mean, it would not be a one-size-fits-all, but I think what we're getting to, you just said that you agreed with the 80% because it's
No,
a good...
not 80%. I agree with the cross-fertilization, not the, and I said, I went
So
on to
what
say not the
percentage?
amount.
No, but I'm saying 80% of qualified persons. So think about it. And I know we have one or two members who wish to pose questions. But think about it. You have a board that has 80% of the persons who bring to the table the skill sets that you think will be in the best interest of the organization, and 20% of persons who may bring other kinds of skill sets. They may not have the academic qualifications, but they bring a nuanced understanding and other kinds of those other kinds of skills that you're looking for, perhaps softer skills, and the cross-fertilization of the both then brings the best possible set of people to the fore. Is that not something that we should all try to embrace in the interest of our members?
Let me say that
Is it not something we should try to embrace?
I want to qualify my response to that as opposed to saying a yes or no.
Okay.
Right? From where the credit union movement started and to where it got, where it is now, in terms of the asset, it was really built on the backs upon persons who were not required to possess those qualifications. That is not to say...
And that is the historical
Right.
context.
Well,
we're not there
right.
anymore.
Right.
In fact, we're a $20 billion enterprise now.
I agree. And I'm saying that where we are now, we are saying that we have no objections to to persons who are required to possess a particular skill set or qualifications to come on the board. And I'm also saying, as I said before, that to the extent that those competencies don't reside readily on a board, those competencies can in fact be sourced. What we are saying
At a cost?
also...
At a cost?
Well, a lot of the operation in movement is built on voluntarism.
Okay.
So a lot of persons who contribute their time and effort to the movement are not paid.
Okay.
Right?
So you have professionals, a cadre of professionals who will give up their time and their professional expertise free of charge.
It exists now.
I'm just asking you yes or no.
Yes, it exists now because...
So why not embed it in the governance arrangements?
Because if you are saying that we are going to embed it in the governance in terms of the board, as I said before, it is going to eliminate the opportunity for more persons who may not fall within that catchment area to be able to serve in the organization.
You have 20%, 80-20.
Well, we are thinking that more like it must be more than that. We are saying that, yes, we have no opposition to cross-fertilization of things, but why not 60-40? Why not 50-50?
I have a colleague, and this is my last point. I have a colleague who used to be in the Faculty of Medical Sciences, and one of the things that he taught me very early, he said, would you prefer to go to someone who is qualified as a medical practitioner, or would you prefer to go to someone who has the qualifications? And that has always stayed with me, but I will end there. I know our member Dan Paul had a question that he wanted to ask.
Thank you, Chair. Mr. Neptune, how long have you been the president of the league?
From April last year.
What's your background?
I'm an attorney at law by training and profession.
So you might be more familiar with this than most. I want to give you an opportunity to explain to the national community the anti-money laundering and the combating of combating the financing of terrorism. Okay. As it relates to the credit union movement from your position as president of the league.
Well, in the context of those pieces of legislation, it really speaks to, I would say, insulating organizations and or individuals from being involved or exposed to terrorist financing and money laundering. It also provides, I would say, guidance and or regulatory framework that creates offenses for persons who engage in such transactions. Within the movement, several credit unions, particularly the bigger credit unions, and the smaller credit unions do in fact benefit from...
Before you continue, are you aware that the credit union movement now major component of the Financial Action Task Force?
Yes, and that's what I'm coming to.
Okay.
That is exactly where I'm going.
Okay.
Because we are part of it because we were interviewed on the last time when we had the country assessment.
Sorry, we being again.
The league, sorry.
Okay, all
The
right.
league
Let's
was
get away from
league was interviewed. My apologies, Madam Chair. Yes? And as I was saying, there are several of our credit unions. The bigger credit unions, they have their own, I would say, in-house compliance unit that treat exactly those issues in terms of terrorist financing, anti-money laundering activities. And the smaller credit unions do in fact benefit from a shared service provided by the league to mitigate against that. So we are very well aware of our role or our, I would say, participation in that, the financial landscape as far as that is concerned, and we do in fact play our part in the context of the supervisory framework of the credit unions as far as anti-money laundering and terrorist financing is concerned.
There's something I want, just a quick question. You said, this is your words together, I'm just quoting you. The sector has adopted a respected approach to AML and CFT. What is a respected approach?
Respected approach in the context of we recognize what the legislation requires and what we are required to in terms of compliance with the regulations.
And do you meet with the FIU?
Yes, we meet with the FIU very regularly. As a matter of fact, the director of the FIU do in fact contribute to a lot of our training programs as put on by the league. We put on a lot of training programs as far as FIU are concerned, and the director does in fact do a lot of presentations at our programs. So we have a very close relationship with the FIU.
Thank you.
Mr. Charan?
Just as an add-on to Senator Dan Paul's question, how old is this legislation that you are compliant with?
Are you, is it the, speaking of the anti-money laundering?
No, you said you are compliant with all the legislation that you need to be compliant with, your members. I just want, for the public knowledge, how old is the legislation? How old is the act?
Well, I don't have the exact data, but as long as the act has been enforced, we have complied with it.
And roughly how old the act is?
Well, I can't recall, but it might be about, about 10 years, 10 or 15 years. Could be since sometime. I'm not too sure exactly, but since it has been, we have been compliant. So it might have been 15 years, 10 or 15 years.
I don't know if there are any other questions from members. All right. Before I ask our main stakeholders to bring some closing comments, I just want to flag a couple of closing observations from my perspective. I want to reiterate that the purpose of this inquiry is not to suggest or to highlight any failings. The purpose of this inquiry, if I could paraphrase from the 4 objectives that I stated at the outset, is to ensure that in moving forward, we have the best possible mechanism to ensure oversight and regulation of a sector that has grown significantly since its 1971, the act that enables it. It has grown, and the movement, cooperatives, predates that. But I want to ensure that we are clear that in moving forward, we have the best possible architectural, legislative, and oversight and regulatory framework for the credit union sector that, as at today, we estimate at 20 billion and 700 odd members. The other thing that I wish to state is that it seems apparent that the Commissioner's Office at the Ministry of Labour recognizes the challenges that it has faced, given resources, but certainly to my mind, and I think the members of the committee, we are comforted that the Commissioner's Office recognizes that the legislation requires updating, but perhaps more importantly, and my words, the Commissioner's Office recognizes the importance of both the Ministry of Finance and the Central Bank of Trinidad and Tobago as partners in ensuring that the credit union sector of Trinidad and Tobago remains adequately regulated with the appropriate amount of oversight in the interest of the people of Trinidad and Tobago. I would wish to add that I think from the last meeting there was a question of too big to fail, and I would want to add that I think that we agree that the credit union movement is too significant in the financial ecosystem of Trinidad and Tobago, and we cannot allow it to fail. And that really, those are the concerns and the issues that would have underpinned this committee's inquiry into the adequacy of the governance, oversight, and regulatory arrangements in place for the credit union movement of Trinidad and Tobago. With respect to the role of the League, this committee acknowledges and recognizes the role, albeit in a non-legislative way, recognizes the role that the League has played in providing that cohesiveness among the credit union movement in Trinidad and Tobago. But I would wish to add that the League, given that it is not legislated, really cannot bring credit unions to the place where they ought to be in terms of the required levels of oversight and regulation. As it were, it is really more of a coercive sort of arrangement where you can encourage your members to behave in what is in their encourage your member credit unions to behave in what is in their members' interests and in the long-term financial interests of the people of Trinidad and Tobago. And I'm adding in here the people of Trinidad and Tobago because, as we were reminded today, we can ill afford for there to be another catastrophe in the financial sector, in the credit union sector, as what occurred in 2008. And our collective efforts really should be towards ensuring that that never happens in Trinidad and Tobago again, because I don't think, given our financial circumstances now, the country can afford to intervene in the way in which it intervened in 2008. So with those few words, I would like to invite first Mr. Neptune to make his closing remarks, and then the Commissioner, and then, of course, PS will have the final word.
Thank you, Madam Chair. Again, we want to thank, when I say the League, we want to thank the Chair and the members of the committee for giving us this opportunity to have this dialogue, and hopefully the contributions that emanated during this sitting will in fact assist in terms of taking the movement forward and strengthening the movement as we go forward in Trinidad and Tobago.
Scott?
Thank you, Chair. To you, Chair, and the members of the committee and the listening public, thank you so much for having us. Thank you for the contributions from the League and from the members, the questions, etc. They certainly will help us as we move forward. We look forward to growth in the movement and, of course, changes to our regulatory landscape, which we have been working on, I can tell you personally, since 1998. So thank you.
P.S. Willis.
Thank you, Chair and members, for the opportunity to come before this committee. I look forward to the outcome of the deliberations of the committee. As you would have indicated, there is a significant size of the population investing their money in credit unions. So any outcome that would improve the governance of the sector, ensure the financial stability of the sector, and improve and modernize our legislative framework will be welcome. Thank you.
Thank you again, and with those few words, I would like to bring this inquiry to a close. Thank you again to all of the stakeholders who joined with us. Thank you to our listening and viewing public, and have a good day, everyone.